These are in listen-only mode.
Good morning. We want to welcome everybody to the OCC webinar on annual CAB reporting. It is 10 a.m., but I see that we still have several people who are still logging online for the webinar, so we are going to hold the beginning of the broadcast for about another 2 minutes to allow these people to log on. So if you'll please bear with us, we will start in about 2 minutes. Thank you.
Welcome to GoToWebinar, Web Events Made Easy. Welcome to GoToWebinar, Web Events Made Easy.
Okay, good morning again. My name is Sue Jevning, and I am the Communications Specialist here with the Office of Consumer Credit Commissioner, and we'd like to welcome you to the webinar related to annual reporting requirements for the credit access business industry. CABs are required to file an annual report providing data related to transactions conducted throughout the previous calendar year. And in today's webinar, Carl Hubenthal will provide an overview of the data that is to be collected and how that data will be reported during this process. He'll also discuss any differences or similarities that exist between quarterly report filings and this annual report filing. We have scheduled this webinar for approximately 45 minutes, which consists of Carl's presentation and a follow-up question and answer session. If you do have questions or comments during the presentation, we do ask you to send those in using the control panel on your screen, and we'll address those questions during the Q&A session. We will also publish a recording of this webinar to the OCC website so that you can refer to it at a later time. Once the recording is available, we will send all attendees an email notifying you of its availability. At this time, I'd like to introduce Carl. Carl is a financial analyst with the Office of Consumer Credit Commissioner, and several of you have had the opportunity to speak to him already. He has been working with CABs and industry stakeholders on the development, reporting, and analysis of transaction data. So welcome, Carl. At this time, I'm going to turn the presentation over to you.
Thank you, Sue. Again, my name is Carl Hubenthal, and today we're going to go over briefly some procedures to file an annual report, and then spend most of the time talking about the item descriptions for the annual report. So again, just to stress what is upcoming, there are 2 reports due on January 31st. We have the 4th quarter credit access business report that would be due January 31st, and a new annual report which has not been filed yet. So we have both the last quarterly report for the year and an annual report for the year. Both reports are going to be due January 31st. Essentially, you're going to go through the same procedures to file an annual report as you've done for a quarterly report in the past. If you need some more information on how to do that, we're going to discuss that now, but also we went into that in more detail on the quarterly reporting webinar that this office produced earlier. Also, there's some terminology that's used on both annual reports and quarterly reports, and you might want to refresh yourself on the quarterly reporting webinar and the instructions page for the quarterly report. So to file an annual report, you again go to the Office of Consumer Credit Commissioner homepage. You'll see a dedicated button that has both the method to file a quarterly and annual report. After following that, you'll go to a dedicated page just for data reporting for credit access businesses. There are both instruction or sample forms for both the annual report and the quarterly report here in both PDF and Excel. There's also an instructions document for the upload format. If your business chooses to upload their data, it has to be in a specific format. And the format for both the quarterly report and the annual report are found here. To begin the data reporting process, you'd have to log in right here. Then you're going to go to the actual web entry data portal used to file your data. And so it's the same page. It may look familiar if you filed the quarterly reports before. This is also where you would come to file the annual reports. You might have filed a quarterly report right here, quarterly upload, using that menu button. Today we're going to talk about the annual report, and it's just one menu button below. If you have your data properly formatted, you can upload it, and there's instructions on the previous page. But today we're going to talk about just the annual report and what that looks like for the web-based data entry system. So first thing, you would click on an annual report. It would be familiar to you if you filed a quarterly report. What we're looking for is each license location would have to file a separate report, and you would do that by entering your actual license location number, which is going to be just the numbers after the hyphen. An example is the highlighted in red numbers there. You'd enter those in. You'd select the reporting year for the annual report that you would want, so 2012. It's the calendar year. Once you've entered your license, if your store is correct, your information about your store on your license will populate, and you'll see that on the screen. Once that's correct, there's a little more information you'd have to enter or update about your contact or compliance officer, and just some general information about last year's activities. So this is the data entry page for the annual report. It's set up the same way as the quarterly report if you've done that before. The only difference would be the actual item descriptions and what the data we're asking for. But if you can see, there's 4 columns, there's several rows, and data has to be entered into every row and column. And again, acceptable data is going to be numbers and up to 2 decimal places or NA, but some information has to be entered in every field. Characters, as you'll see, you may get an error code if you've had problems before with entering. You may want to enter in a $sign or a comma. Well, you can't enter characters, just whole numbers or up to 2 decimal places. If you may get an error message if we see in the first row, the second column here, there's a $sign in front of the $0, and then you would get an error code up here that wouldn't let you to proceed. So you want to make sure all the data is even formatted right on the data entry. Again, this is the bottom form of the annual report, and it may look a little bit different than the quarterly report, but you just have to make sure before you click submit, there's any check boxes you'd have to check and enter in the compliance name, the compliance person's name and title. Okay, now after that brief introduction on how to report, we're going to talk about the actual report items for the annual report. And again, we want to make sure the most meaningful data will be produced if everyone's clear on what we're asking for in the items and how to treat your own transactions to properly submit the data. So if everyone's clear on definitions, then that's going to be produce the most meaningful data. So we know what everyone's submitting and how to interpret that. Again, just like the quarterly report, there's essentially four product classifications that you have to report for. We have the deferred presentment transaction and the auto title loans that are authorized under a credit access business license. Now, each of those is broken out to whether the repayment plan is scheduled to be paid in a single repayment or a single installment or multiple installments, multiple payments. So you'd have to break out your products in that method for the reporting. This is the first report item on the annual report, and what it asks is a count of all paid off loans last year or this current year. But so for calendar year 2012, a count of all loans that were paid off, and this specific one classifies those loans as paid off without ever refinancing. So if a customer received a new loan this current year and then paid it off this year without ever refinancing it, you would report that. If the customer received a new loan in a previous year and paid it off in this reporting year without ever refinancing it, you'd still report that here too. So in this example, we have a hypothetical portfolio of 100 transactions. We see a portion of those transactions were entered into before this reporting year, and 85 were entered into in the reporting year. Of all those transactions, we see a total of 20 were paid in full during the reporting year. And of those 20 that were paid in full, 10 of those accounts never refinanced their obligation before paying it off. So you'd report the 10 there. Item number 2 goes along with the information in item number 1, except we're looking for those paid in full loans that did refinance, and then classify those loans by how many times they refinanced. So we're looking at loans that refinanced 1 time, 2 to 4 times in this example. So we carried over 10 loans of the 20 from example 1 that actually refinanced, and then we broke it out to, well, 5 of those 10 refinanced 1 time, and 5 of those 10 refinanced 2 to 4 times. So you can report that information there. Number 3 is a similar question to a quarterly report question, and it asks for the total amount of the cap fees charged. But this is going to be the total amount of cap fees charged on all contracts during the report year. So first, what we're looking at is all extensions and all refinances entered into in the report year. And then what we're looking for is the charged cap fees. And so it seems like the single payment transactions are an easier concept to understand. So all scheduled cap fees, we start with all scheduled cap fees, really, to break down this item number. If the scheduled cap fees are not subject to any sort of refunding, if they're all scheduled cap fees are earned when the loan is made, then you would report that there. We get into another scenario where it seems there was a little more product variation than we originally thought. In some cap fees are either subject to refunding or accrue daily on, it seems more likely on multi-payment transactions. In those situations, we'd still start with scheduled cap fees, but then if a loan is either paid in full or refinanced and either a portion of the scheduled fees are refunded or never accrued, we'd only count the ones that are accrued. If there's scheduled fees that are still subject to accrue, like in the example bullet point 1, where a loan is active after December 31st and there's scheduled fees that haven't accrued but nothing's been done on the transaction, either paid off or refinanced, where the fees have either refunded unearned fees or never going to accrue, we're going to count all scheduled fees there. So if there's scheduled fees that have the possibility to still accrue, you would report those there. The only time you wouldn't report scheduled fees is if they were either refunded because of an early payoff or some scenario like that. Number 4 is a little unique question, and it's asking, normally we find that there's either a letter guarantee, a letter of credit guarantee, or some other agreement between the CAB and the lender that actually 100% guarantees the loan. So we want to report all the loans where the letter of guarantee or letter of credit was exercised and then the CAB repaid the lender for the loan. In a scenario in this box, we find a common clause that would trigger the letter of credit would be consumer default. So in this example, if this hypothetical borrower, Sally, missed 2 consecutive payments on her loan, she was delinquent for those 2 payments, and then the letter of credit was exercised and the lender was repaid by the credit access business. So you would report Sally's loan and this item number. Number 5 is pretty simple item number. It's the number of consumers obtaining a new loan in the reporting year. So we ask a similar question for the quarterly report, but instead of reporting those quarterly numbers unique to the quarter, this is unique to the year. So look back and find out how many customers obtained a new loan at each location. So we're looking at each location and each product classification. In this example, we show that there are 10 different customers receiving new loans. At some point, 7 of those customers had paid out their loan and then obtained a new loan. We have 17 new loans or 17 new extensions of consumer credit, but we only had 10 customers. So item number 5 will only count 10 unique customers receiving 17 extensions of consumer credit, but we're looking for customers here. The next item number, and we carry over some of that information again, the next item number looks at the number of new extensions of consumer credit, and if you remember, that's defined as new cash advances, new loans. Right here we had 17 new loans in the previous example, and you would classify those according to the dollar amount advances. In this example, we had, of those 17 new loans, 10 of them were between $0 and $250. The remaining 7 of the 17 were above that but less than $500. So you classify that according to the loan amount in this example, just for new loans. Question 7 goes along with question 6, except we're asking for the report dollar amount in dollar ranges instead of number of loans in dollar ranges. So we had 10 loans in question 6A, and those 10 loans had a dollar amount of $2,350, and then the 7 loans had a dollar amount of $2,100, and you put that in the appropriate dollar range. We see the example is 10 new loans. 9 were for $250 and one was for $100. That makes up that $2,350 we see reported in 7A. Number 8 is asking for refinances on those loans that we examined in number 6 and 7, okay? And it's a little familiar question or type of question on the quarterly reports where we're looking for number of refinances on those extensions of consumer credit reported in a previous number, okay? That's kind of the way the quarterly report functions. And here what we're looking at is customers obtained new loans last year and count the number of times those loans were refinanced last year. So those are just counting refinances on loans in the reporting year. We see an example here that there were 11 of the 17. We started with 17 loans. 11 of those loans were refinanced. 10 loans were refinanced once each, and then 1 loan was refinanced twice. If you added those up, it would be 12 refinances on those 17 loans that we had talked about in the previous slide. Number 9 is the total dollar amount of extensions of consumer credit. Okay. Now, you don't have to classify this report number by any sort of dollar ranges. You just report it in aggregate. And so if you really examine it, we get that information in 2 ways. Number 7 asks for it classified in dollar ranges, and number 9 asks for it just an aggregate amount. So really, you know, we'll know if people are consistently reporting correctly if number 7, the aggregate number 7 equals aggregate, you know, the reported number 9. And that would make us feel confident about the data. Number 10 asks for total dollar amount of refinances for the report year. So number 9, we asked for dollar amount of extensions. 10, we asked for dollar amount of refinances. Now this item number differs slightly from a previous question about refinances. Excuse me, I'll go back. On the refinances previously asked for, and you can kind of see the shadow number 8 below that, and it asks for the total number of refinances on extensions in a given year. Well, number 10 doesn't preface it with having to be refinances on extensions in a given year. It really, what we're asking for, 9 and 10 should be all cab contracts, okay? No matter when a loan originated, if a refinance was entered into in the reporting year, you're going to count that dollar amount on the refinance, okay? And so number 8 asks for just the number of refinances on extensions in a given year. Number 10 asks for all refinances, all cab contracts, really, the dollar amount. So that number 10 was the last item number, but we've kind of grouped these together to show how they relate and how you should view these answers or these item numbers to interact together. Question number 1 and 2 deals with paid outs, okay? And so you'll just examine the loans that paid out in the previous year and clarify them whether, A, did the customer refinance this loan before it was paid out, or did they not? If the customer didn't refinance the loan before it was paid out, you'd report it in item number 1. If the customer refinanced it before it was paid out, you'd report it in item number 2, and you'd have to classify it and see how many times it was refinanced. We grouped 5, 6, 7, and 8 together. And so these are all going to be based on consumers coming in and getting new loans from a credit access business in the report year. 5 looks at the number of customers who come in and get new loans, and those are unique customers per store or per location. So a customer can have more than one new loan, but it's only one customer for the year. Number 6 and 7, we're counting number of loans and amount of loans in specific ranges those customers got. And number 8 counts the number of times those loans in number 6 and 7 were refinanced in the report year. Items number 3, 9, and 10 really kind of go together because what we're looking at is total transactional information on all agreements entered into in the year. So we're looking at what we call all CAB contracts. We're looking at the total fees on all those. And the components in the CAB contracts for the reporting process is either a new loan, which is an extension of consumer credit, or a refinance of an extension of consumer credit. So all agreements that were entered into in the year for both refinances and extensions and the fees charged on those agreements are reported. So again, if you have any problems with setting up accounts or submitting information, the contact information should be the CAB reporting email address here on the screen. And we'll take any questions if there's any outstanding questions Sue wasn't able to answer.
Hi, Carl. I do have a couple questions for you. The first question asks, for the fields in the end-of-year reports that are the same as the fields in the end-of-quarter reports, are you going to be comparing the data from those two sets of reports, and would you expect the total of the end-of-quarter reports to be the same number as your end-of-year report? And the question is asked because there are cases where subsequent reports, loans were voided, or other unique scenarios occurred.
Okay, so that's a really good question, and that's one we've always dealt with in creating these quarterly reports, and that's really the genesis of the annual report, which we knew some data wouldn't roll up quarter by quarter by quarter to create kind of a yearly volume information because of the data we were asking for was really very quick in related to the time it was created, and so we knew these loans would last longer than reporting quarters. That's really why we created the annual report. Now, there's information, and essentially, for an aggregate basis, we're going to assume some report items are very similar to if you aggregated quarters together, but we know there's licensees that have gone out of business and won't be filing an annual report. So they may have filed a quarterly report, and that information might not be included on the annual report. But the way the quarterly reports are set up, it's really a quarter is a unique reporting cycle, and we're just encompassing information related to that quarter, and that's why this annual report is here just to catch all information on a yearly basis. So really, we're not expecting, there are some items that we understand will show different amounts, but we don't expect, there are also some other logic tests that we may look into that it would be illogical, that it would be very off. Okay, we know certain nuances exist, but we expect some consistent trends.
Carl, I have another question for you. If you go back to reporting item number 4, where the CAB records the repayment to the lenders, the question is, if the CAB has repaid the third-party lender and then took assignment of the loan, and then the customer later comes in and makes payment or pays off that loan, so the funds actually went to the CAB, not the lender, how is this to be reported?
That's another good question. Number 4, you almost can exclude any customer, in my view, if I understand the question right, you can exclude any really customer data from this question. It's really just the interaction between the credit access business and the lender. If a letter of credit was triggered and the lender was repaid under that letter of credit, then that's going to be recounted.
Okay, thank you, Carl. At this time, I'm sorry, a third question just came in. If you will please go to report item number 10, could you please clarify the word refinances that you have in double quotes. Is this supposed to be the principal or the cab fees that are being reported?
So that's a great question too. When we have the word refinanced, for that we're classifying a cab contract or an agreement as that's what we're using those quotes for. What we're looking for in the dollar amount, we're not looking for necessarily new cab fees, but maybe if the transaction calls for it, if old cab fees were refinanced and included in the new principal, then you'd report that. So we know there's going to be refinanced amounts that are probably going to far exceed the cash advances, but this is just the kind of sum of all amounts issued on all agreements, if that makes sense. It's basically, if you look at maybe the amount financed Fed box on a refinance, that's kind of what's going to be reported, and then the cab fees, if they're included in the finance charge on the Fed box and the 10% lender interest or less, will be not included in this amount financed for refinance transactions.
Carl, we're being asked if there are any other annual reporting requirements for our agency relating to other products that are not reported in the CAB quarterly or annual report. Are there any financial reports, for example, a balance sheet, that should be filed, and if so, where do we get this information?
That's an excellent question, and it's kind of dependent on your own business. It's generally, I can't say no. It's quite possible there are other reporting requirements if your business possesses another license. For example, we know there are credit access businesses that also have a regulated loan license, or we know there's credit access businesses that have a pawn shop license. Okay, there are other reporting requirements for those licenses, and those are more similar to financial balance sheet information that they report annually. For a credit access business, there's not that requirement. For the transactions subject to a credit access business, this is the annual report. There's nothing required to show kind of, net income statements or balance sheet information regarding that. So I would, be mindful about what licenses your business possesses, because each license is going to have different requirements.
Okay, Carl, we are being asked for installment loans, are payments that are part of the payment schedule considered refinances?
No, if an installment loan, if the customer is currently paying under a regular scheduled payment according to the contract, and it just happened to be, for example, 6 biweekly payments, and they're still in that payment stream, that's still the extent of consumer credit. It's only a refinance when the customer signs a new agreement and refinances the unpaid principal and any accrued fees and unpaid interest into a new obligation, and the new fees are assessed on that. Or if no fees are assessed on that, I mean, we'd still consider a refinance it's the traditional definition if unpaid amounts is refinanced and loaned in the new agreement. So for installment loans, it's only refinanced when they're halfway through. I mean, it's, for example, halfway through a normally scheduled payment stream, the customer contacts the credit access business, discusses they can't make their payments this month, so they decide to, say, enter into a new obligation and extend the payments out through this refinancing.
Thank you, Carl. At this time, those are all the questions we received. What I'd like to do is just hold the line open, if you will, for another couple minutes to see if we have any final questions or other thoughts that we can answer. So we're going to go ahead and just wait another minute or two and see what comes through. Okay, we do have a question coming in that says, in January, there is a quarterly report and an annual report due. We just opened the business in October. That's where the question ends, so I'm presuming they're asking what reports are due for this particular business.
That's a great question, too. I'm going to go to a screen at the beginning of the PowerPoint. So if you bear with me. So the question is, essentially they opened their business in the fourth quarter. So they want to know what report they have to file. Well, if they're, you can't open a business without being issued a license, so their license was issued at least in the fourth quarter. You still see the fourth quarter, all transactions from the date of licensing through the end of the quarter would have to be reported in a fourth quarter report, as well as all transactions from the date of licensing through the end of the year would have to be reported in an annual report. So it will be an abbreviated report, and you can focus on just the transactions you did, but you see that they both fall into dates that are subject to reporting requirements. Now, if there was another situation, just hypothetically, if, say, a license was issued in July in the third quarter, but your business didn't open until the fourth quarter, we held the standard. We'd still expect a report for the third quarter, even while your business wasn't open, because you were granted a license, you had a permission to operate, and we need the information reported that, well, you had 0 transactions in the third quarter. We still need that information reported, and we would expect the report from the date of license issuance if that falls into a reporting period.
Thank you, Carl. Again, we're just going to wait another moment or two to see if we have any additional questions that come in. Okay, Carl, we're being asked another question. This one is regarding a payday loan, not an installment. If the customer has reached their 8th rollover and has not paid off all the principal, do we refinance or make payment arrangements on the principal only?
So that sounds like a compliance question, which let's go ahead and dig into it. Under state law, there's nothing to prohibit you from doing either of those scenarios as long as they comply with, normal federal and state guidelines. If you and the consumer enter into a refinance that's properly documented, that's fine. If you want to enter into a payment plan, some sort of workout arrangement where the customer is not charging any fees, that's fine. If you want to hold the payday loan out in default, because the customer didn't make payments. Those are, some of the options. I'm sure we are aware there are some city ordinances that deal with the refinances and rollovers of payday loans, so you should be familiar with what those requirements are, but they're not the same across the state. So you'd have to look at your local jurisdiction as well as state law possibly to answer that question.
the licensee notes some errors, do they have to submit again the entire report? How do they go about correcting those errors?
Well, that's a great question, and it's a question we've come across several times just because of everyone getting to know everybody in this process. The easiest way is to contact our agency at the CAB reporting email address and then brief us on the situation, what you think is incorrect, so we can verify that. And then most likely the easiest way is for us to remove your entries and then allow you to resubmit those entries all over again with the corrections.
Okay, thank you, Carl. We have a question. It appears it's related to the flat file upload option. The licensee is asking, how can we find out if our software is compatible with the files required for the agency?
Well, let me do something here. I'm going to pause my screen and so I can pull up a file. That should be okay. Okay, right? Let me see if I can do that. I'll exit out of here. Okay, so I've pulled up a file with the reporting requirements, documents, and definition on the upload option, and that's found on our website. And you cannot upload a file unless it's in a proper format, and it's possible your software provider will allow you to format your data this way and you upload the file, but I think you'd have to look into it a little more than just saying, well, I guess our software does this and I'll just click upload and something will happen. If we go down, we'll see, and I'll just explain the easiest way I look at this is, let's see, this is the annual report right here. You should be seeing the annual report. So this is the format it's got to be in, and I'm just going to call it a .txt comma separated file. So you can open Notepad and enter your data in this way in one straight line. It's not in one line, it's in like 6 rows here, but it would be required to be in one line. This is just saving space right here. So it would have to be an actual this format and then each item separated by a comma, and I use .txt Notepad. I would put it in and you can submit it that way. So if you'd like to format it that way, you can. Otherwise, ask your software provider what's the best way, what options are available under these requirements.
Thank you, Carl. Right now we have approximately 2 minutes left in the scheduled webinar. I don't have any more questions on the screen at the moment, but if you do want to get one last one in, we've got about another now minute and a half left, so please go ahead and submit it. Okay, well, it looks like we're not receiving any more questions or comments. Oh, I'm sorry, I do have one last one in. This is our final question. We're being asked, Carl, can we highlight again which lines need to be associated with only loans originating within 2012, calendar year 2012, versus the origination in any previous year?
Yeah, we'll go through that. That's a great question. And let me jump back to the reporting item descriptions. We're not going to get cut off, are we, Sue, if we go over? Okay, great.
We can continue on if we have another question.
Okay, so basically we are just going to say basically yes or no on these item numbers. So item number 1 is no it doesn't have to be originated only in 2012. It just has to be paid in 2012. Item number 2 is no, the loan doesn't have to be entered into in 2012. It just has to be paid in full in 2012. Item number 3 is all cab contracts entered into in 2012, the cab fees on those will include refinances on loans that were originated before 2012, but the actual refinance was in 2012. So all agreements entered into in 2012. Number 4 is all contracts, all agreements where the letter of credit or the guarantee was exercised, no matter when the loan was originated. So we're counting the number of times it happened in 2012. Number 5 is number of unique consumers in 2012 who obtained a new loan. Number 6 is number of new loans in 2012. Number 7 is number of new, dollar amount of new loans in 2012. Number 8 is number of refinances in 2012 on the new loans originated in 2012. So there's 2 kind of qualifiers on number 8. Number 9 is total dollar amount of new loans on 2012. And remember, it can't be a new loan if it was originated before 2012. I mean, just number of new loans in 2012 for that one. And then number 10 is number of total dollar amount of refinances in 2012, no matter what loan it's refinancing. So that's kind of the tricky that's kind of the tricky thing too, is we're just looking at 9 and 10. Basically, if you add 9 and 10 together, that's all cab agreements. Item number 8 is just the refinances on loans originating in 2012, and number 10 is all refinances. If that doesn't clear it up, I'm just joking. Okay.
Okay, well, it does look like that was our last question, and you did answer her question. Thank you very much. At this time, we are going to go ahead and end the webinar. However, if you do have further questions or would like to ask more specific questions, you can contact us at cabreporting@occc.state.tx.us. That email address is provided in the PowerPoint. Or you can call us at 512-936-7600. We hope you have a wonderful weekend, and we thank you for participating.